Crypto-related donors, they were big spenders in the election, especially in these congressional races. And now we have what appears to be a pro-crypto president. What does this all mean for the price action on Bitcoin and also crypto-related stocks?
It's been a good thing so far this week. So you had the crypto industry spend more than $245 million, more than 280 lawmakers elected to House and Senate seats with a pro-crypto stance. You've got Coinbase, which was the largest single corporate donor, gave $75 million to the pro-crypto PAC Fairshake, one of the top spenders this cycle. They gave $75 million to them. Their stock is up 41% this week. And that's a product of the fact that they're taking a victory lap for having been so effective in the congressional races, but also, as you mentioned, a pro-crypto president here who has promised to oust Chair Gensler at the head of the SEC. Now, Gensler's brought more than 100 enforcement actions against the industry, including Coinbase. Separately, you've got Robinhood up 24%. They received a Wells notice related to their crypto business that may not materialize in a lawsuit if you have different leadership over at the SEC. Meanwhile, look at Bitcoin mining stocks. They are up in the range of 25 to 30% in the last 5 days. That is a product of the fact that Donald Trump has made many promises to this industry. One, that he will spend money on building out a robust energy production and transmission infrastructure in the U.S. to make it more competitive in AI.
Welcome to DRJ Crypto News Update. Welcome to episode 58. Subscribe now. Anticipation of reduced regulatory scrutiny under Donald Trump has sparked renewed enthusiasm in the crypto sector. Trump's plans include appointing a crypto-friendly SEC chair and creating a strategic Bitcoin reserve, aiming to make the U.S. the crypto capital of the world. If reduced regulatory scrutiny under a hypothetical Trump administration led to increased investment and enthusiasm in the crypto sector, this would have several implications for the market, regulation, and innovation. Let's unpack this scenario. Hypothetical scenario. President-elect Trump promises to ease restrictions, establish a Bitcoin reserve, and create a crypto-friendly environment. Focusing on fostering innovation rather than enforcing stringent rules. Real-world context. During Trump's previous administration, regulatory agencies varied in their approach to crypto, with some supporting innovation, e.g., the OCC under Brian Brooks, and others maintaining a cautious stance. Increased investments. Investors often interpret reduced regulatory scrutiny as a green light for growth, leading to increased inflows into the crypto sector. Venture capital firms and institutional investors might be more willing to back crypto projects with fewer compliance concerns and market enthusiasm. Reduced fear of enforcement actions, e.g., lawsuits against exchanges or token issuers, could boost sentiment, encouraging retail participation and speculative buying. Startups might flourish under reduced regulatory burdens, focusing on product development rather than compliance costs and infrastructure expansion. Companies may choose to headquarter in the US, drawn by favorable policies, potentially reversing the trend of crypto firms moving offshore. Renewed interest in decentralized finance and non-fungible tokens, combined with clearer regulations, could lead to a resurgence in these sectors, contributing hundreds of billions to the market. Legislation. Pro-crypto lawmakers could push for laws that exempt certain digital assets from securities classification or offer tax breaks to blockchain firms. Agency direction. Appointments of crypto-friendly officials to key agencies, e.g., SEC Chair, CFTC, might lead to rulemaking that favors the industry. Global implications. A crypto-friendly U.S. policy stance could challenge regulatory frameworks in other regions, sparking global competition for crypto innovation. Present environment. The SEC under Gary Gensler has adopted a stricter stance, targeting token issuers and exchanges for non-compliance. There's also uncertainty surrounding stablecoins and DeFi regulation. A hypothetical Trump administration. A more hands-off regulatory approach could shift market dynamics, contrasting with current enforcement-heavy practices. Volatility. Rapid market cap growth could lead to speculative bubbles, with unsustainable valuations in smaller projects. Regulatory backlash. A perceived lack of oversight might provoke criticism from regulators, leading to potential political opposition. Global competition. While the US might see growth, other regions with clearer frameworks, e.g., EU's MiCA regulations, could attract competing investments. Tax revenue. Encouraging crypto adoption might generate significant tax revenue from capital gains and business activities. Job creation. A thriving crypto sector could create jobs in tech, finance, and blockchain development, boosting economic growth. Tell me what you think of today's update. Thank you very much. See you on the next video.